Hey, what has happened, Bulls and Bears? We're back with another dose. Got a lot of economic financial news to get caught up on. As always, we're midway, more than midway now, through October. And a lot of people are looking for something to snap in the very near future in the economy. But then other people say they can keep finding new ways to kick the can down the road. Where are we at in this economy? Well, stocks, more all-time highs, Dow Jones Industrial Average. Let's see here. New all-time highs. The S&P failed to set a new benchmark, even though it had an intraday record earlier in the session. We're talking about Thursday. We'll see what happens today on Friday. But I expect markets to keep going higher unless something huge happens to derail it. Right? Remember, pretty much every downturn that we've seen in the economy has been triggered by something that was unexpected, something very surprising. Something that jumped out of the woods, or what people would refer to as a black swan event, right? We saw what happened in previous downturns. Look at 2020. That was a very brief recession. We had a global health crisis. Well, speaking of global health crisis, here's how bad the consumers are doing right now. Take a look at this. Consumer Watch, U.S. worries about missed debt payments are the highest since 2020. This is I believe, a survey of consumers. And basically, when you look at it, if consumers are this worried and the most worrisome since 2020, what does that tell you? 2020 was a shutdown in the economy, complete shutdown. But yet today, there's no shutdown, but yet we're still worried. The survey says we're still worried about missed debt payments. Well, we've got a lot of relief out there happening, and we're just going to get into just some of it. But as most of you know, there's massive amounts of relief and assistance programs happening right now. More people living off the government dole, so to speak. Let me just bring up a couple recent reports on this here. Recent approval here of $175 billion in student loan forgiveness for 5 million people. And that's just the tip of the iceberg. There's lots of other things happening, a lot of other programs that are put out there to help people. I mean, I've talked here numerous times about the down payment assistance programs and so much more. If you just look at the number of people living off of basically free payouts, free handouts from the government, it's a lot. And it's setting new records all the time. But retail sales posted solid growth in September, showing a continued strong economy. Remember, a strong economy means people are able to take out more debt, right? This is all run by debt. It's all ran by debt. And to prove the point on that, to prove that this is a fact, that this is all run on debt, take a look at this. Here is just a tip of the iceberg type of story. We have a Dollar General store facing foreclosure because the owner of the location, remember, most retailers and most businesses don't own their own properties. They're just leasing the buildings. Arkadelphia, Dollar General and Arkadelphia faces foreclosure. Wow, it's a tough time for discount stores, right? 99-cent store here in California going out of business. That was a big heartbreaker for a lot of people. Dollar General stores can't even stay in business. You would think that those places with discounted items would be booming, but yet the landlord wasn't able to keep the doors open. So was Dollar General not paying the rent? Armstrong Bank is going after RCS Land Company, LLC, and its owner, developer Richard Sergley, for $533,000, over $500,000 in unpaid loans the bank awarded, including interest from a 2019 mortgage on the property. That just is one example of how everything is run on debt. How many properties out there that have businesses occupying them, how many of them are under a loan where the quote-unquote owner doesn't actually own it because they got a loan from the bank, right? We see it in the residential housing market. We know that most people have some sort of mortgage. Of the 60-something% of people that own their homes, it's only about 1/4 of them that actually own it free and clear. So you're only talking about maybe 15% of the overall population owns their home free and clear, a very small amount, right? It almost seems like they don't want people to own anything. I wonder if that's true. Anyways, same thing happening in the retail sector. We have businesses ran out of locations that are under a mortgage, right? So how much cheaper would it be if all this easy money wasn't flowing, right? Remember, the more easy money that's loaned out or given out, whatever you want to call it, the higher the costs go. The higher the costs go. The more rents, the higher the leases go, because now the owner of the property, whoever took out the loan, has to charge more for the business that occupies the property to meet those payments. Remember, easy money equals higher prices. And when easy money's flowing, prices get bid up, right? It's pretty simple. When easy money stops flowing or when lending standards tighten, prices go down. And imagine if we had really tight standards on banks doing commercial real estate loans, how much lower the cost, the overhead cost would be for businesses. And then that would translate into lower prices for customers, right? So when you look at the cost of things, you can sit there and blame the companies. That's part of it. Greedflation is real, but also you have to blame the banking sector, the banking system, and how, there's no backing to this currency, and that's creating a high cost of living. And just another example, folks, of how this whole system is based on debt. How many stores would close down if it weren't for the loans that are given out for commercial real estate? A weak economy prompts European Central Bank to cut rates again. So anyone thinking that it's just the United States that has to do this, folks, this is worldwide. This is a worldwide phenomenon of fiat money. Policymakers set interest rate for the 20 countries that use the euro. So basically the Eurozone, European Central Bank, bring it up here, cutting rates. Looks very similar to the United States, doesn't it? Rock bottom rates, hiking cycle, very, very big hike, now dropping. And, there's still people out there thinking that the U.S. Is going to drastically change with what's going to happen here in early November, who's going to win. It's going to be massive changes, folks. There'll be some things that'll change, but overall, it's going to be a higher cost of living. More inflation is what I see. I don't see prices coming down at all, unless something sets fire or throws a monkey wrench in the gears of the money creation machine. You know what I mean? So that is where we're at here. Do you see any black swans? Anyone see any black swans ready to land? Well, there's a few possibilities. Let's talk about the BRICS nations. And we know that the BRICS nations are de-dollarizing. They're looking to go outside the dollar. They're not looking to. They're already participating in going outside the dollar. BRICS Alliance, they officially announced a new payment system. Right, we've been talking about this for a while, going outside of the SWIFT payment system that's basically been the global standard. A massive moment for the BRICS Alliance has officially been unveiled. At the BRICS Business Forum taking place in Moscow, participants received brand new cards for the long-awaited payment system. The cards are the first official debut of the landmark project. And there's a lot happening with the BRICS countries. 35 new countries to abandon the US dollar at the 2024 BRICS Summit. That's what's being put out there. Over 35 countries have confirmed their participation in the upcoming BRICS Summit in Russia. Now, how sudden will this turning the back on the US dollar occur? That's the big thing. Will it be something that's put in place very suddenly, and all of a sudden you see a bunch of dumping of US debt, which we've talked about here is a possibility? I tend to not believe that things will happen that suddenly. I'm a believer that things play out very, very slowly unless you see something massive come in, like, again, a 2020 health crisis or something else. But things could fall apart very rapidly as well. Something unexpected could happen, right? If the banks are ever held accountable for all the loans they have loaned out, that would freeze up, that would stop the financial system in a matter of just hours, maybe even minutes. That's how over leveraged the banks are and how much money they loaned out compared to how much money they actually have in deposits. But then again, when it's digital money, you can always count on, or you can always maybe expect the money just to be pumped into these banks if there ever is a crisis moment where the banks start failing. Look what happened to all the depositors in 2023 when you had Silicon Bank and other banks fail. People thought that if you had more than $250,000 in the bank, you would lose your money. Well, that was the rule up until they changed the rule, and they just said, okay, we're just going to create the money, borrow the money, whichever way you want to call it, or whichever way you want to look at it, and we're just going to bail out all the depositors, even some of them that had billions of dollars. So not only did they not stop at the 250,000 that used to be the ceiling for FDIC coverage, they went into the billions of dollars for some of those depositors. Remember, these were high net worth depositors. A lot of Silicon Valley individuals had their money there at the bank, a lot of billionaires. So that's the way it works, folks. So whatever they can do to keep this thing propped up, they're going to do it, unless something big comes in and changes it. Meta is laying off employees at WhatsApp, Instagram, and more. The cuts come after CEO Zuckerbucks declared 2023 to be the year of efficiency, so cost cutting. And here's a story I thought was interesting here out of Fortune. Meta reportedly fires a staffer making $400,000 a year for spending $25 meal credits on toothpaste and tea. Are you serious? So it looks like they're trying to figure out just ways to get rid of people. And if you know how cost cutting works, a lot of times they'll look at the white collar workers, the ones making hundreds of thousands of dollars a year. And the frontline people, the ones that actually deal with customers or work face to face with the consumers, typically those are the last to get let go. And it's funny how it works too, because typically the people that deal with customers make the least. And then the higher you get up the ladder, you start making more. But when you think about it, the ones that are really essential are the ones on the front line, the one dealing with customers, the ones on the phone with the customers. But of course, the people that make the decisions on how much people get paid are going to, of course, pay out their colleagues at the high levels more. But yeah, $400,000 for spending. Someone making $400,000 for spending $25. That seems pretty strange, but that's what's being reported out of Fortune. Home purchase demand destruction accelerates. Prices are too high. This is out of Wolf Street. Here's how they put it. Buyer's strike deepens. Sales of existing homes head for the worst year since 1995. It was always thought that when sales start crashing, that's a sign that real estate prices will start crashing afterwards. Well, remember, they don't have to, because a lot more businesses, corporations, Wall Street firms own homes now versus the 2008 housing bubble. How low did sales go? Mortgage purchase applications. Take a look at this. Let me just bring up this chart here. Getting out of Wolf Street. Folks, that is a plunge. This goes back to the beginning of 2018. And it's only a matter of time now. We've only been at this basement level now for about 2 years. And at some point, you've got to wonder how all these people working in real estate, because when you're making commissions off of sales and sales are this low, what are the real estate agents doing? What are the loan officers doing? The volume is so low. It's amazing how these people are getting by. What are they doing? Are they working second jobs? Like we see reports all the time that a record number of people are working more than one job now. So it could be people are just supplementing their income and working more jobs, gig economy jobs, etc. Some other news here. 23andMe, the company sold, if sold or merged or bankruptcy, the DNA personal data will be sold to the buyer. So it's pretty interesting how all of our personal data is just out there, and a company for the highest bid can obtain it. All right? We don't know what company could buy this if something happens to 23andMe. I remember I almost did that. I was curious to find out. Maybe I come from royalty. But then I started thinking about it. I'm like, okay, so what? Maybe my great-great-great-grandpa was a king, maybe somewhere in Europe. Doesn't help me, right? I didn't get any hand-me-downs from that. So I said, who cares? But a lot of people do it. A lot of people, get a thrill out of doing that. See who they're relative. It can actually help you connect with relatives. You can find people that you maybe didn't know were in your family, or find out their whereabouts from what I hear. I don't really know too much about it because I didn't participate in it, but that's from what I understand about it here. What else is going on here? Other news, folks. Mortgage applications nosedive 17% from a week earlier. People are getting tapped out, folks, and scared, like we talked about at the beginning of the video. More people now, or the same number of people now, are concerned about their ability to make their debt payments about the same level as 2020. Other news, folks, most of Florida's orange crop washed away by the hurricane. 70% of productive citrus currently impacted. Get ready for higher orange juice prices. I don't drink much orange juice. I used to drink a lot of it. I started getting away from acidic drinks because I don't want my teeth enamel to get too weak. So I still have some every now and then. I add some to a smoothie, but not a big orange juice drinker for the most part. Look at this. Major U.S. banks on course to close a staggering 1,000 branches this year. 1,000 branches, folks. More people banking online. More people banking online, doing it on their phone. All these different apps now to get payments and send payments and pay bills. I don't really go to branches much at all. I think I went through a drive-through ATM a few months ago. Maybe once a year I'll actually go to a branch or a drive-through. Maybe twice a year if you count the ATM drive-throughs, but not very often at all. Bottom line, folks, consumers, a lot of people are tapped out. There's a reason why people are the most concerned they've been since 2020. But as long as debt can continue to be issued and people can keep spending and going further into debt, this economy can keep going for a long time. But will we see something massive come out of the BRICS nations' announcements? Will we see World War III bust out? A lot of people are even predicting a civil war because of the upcoming elections, that it's going to be so divisive and one side versus another. I think that's kind of planned like that to keep everybody fighting with each other so they don't actually realize what's happening to them financially. But that's my opinion. I mean, what do you think about that? Am I pretty close to being accurate with that? Let me know what you think down in the comments. I think this left versus right thing is all contrived and, for lack of a better term, cooked up by the media. All right. I think a lot of you might agree with me, but if not, let me know in the comments. Let me know where I'm wrong on all this analysis here. Consumers, a lot of debt, folks, way beyond where we were 2008. Not just the total debt, but the average U.S. debt, so much higher, but banks are not pulling back on the credit like they were back then. Even though there's been scares and banks failing, it's a lot different this time. It looks like they're just going to inflate until they can't inflate anymore. And what's going to stop them from inflating? Your guess is as good as mine, but be on the lookout for that. I continue to remain cautious as far as investing goes. Like money on the sidelines. Not that I have a lot of money, but what I do have, it's on the sidelines. And for the most part, I still have some stocks that I'll just continue to hold because of the dividends. And I've mentioned here many times the stocks that I hold just to get the dividends. And if they go down, I'll just add to them because they're stable companies that will always be here, in my opinion. Starbucks, Walmart, Chipotle, some that I'll continue to hold. And again, I'll just buy more if the stocks crash or have a correction. But as far as the amount that I'm invested in, I'm very, very low right now as far as being in stocks. Much more cash versus stocks right now. Just my opinion. That's what I'm doing right now. I'm remaining very cautious, seeing what's happening globally, the debt levels, the banks over leverage, the commercial real estate loans underwater, giving this a little more time to play out. And we're closing out October here in a couple more weeks. We're going to see what happens. What do you think is going to happen? Civil War, World War III, BRICS announcements, BRICS announcement that comes up and shocks the markets. Some sudden bank failures like the ones that popped up in 2023. Are there more failures and there are more problems bubbling under the surface that we can't really see right now? All right, your guess is as good as mine, but that's my analysis. That's the news I wanted to bring to you today. Please let me know what you think about this down in comments. Please do me a big favor. Make sure you're subscribed. Help to keep this channel alive. Very much appreciated, everybody. Thanks for being here. Keep stacking as always. Bye for now. Peace.